On the dividend news, we'll go ahead and start off with the bad one, which was actually the Arbor Realty, which actually cut its dividend by 30%, ending its 12 consecutive years of dividend increases. But on the good side, we do have a raise from Apple, which was a 4% dividend hike. Not a big hike, but we'll see what happens with them. We do also have PepsiCo, which hiked its dividend by 5%. Actually, a lot better than Apple's. Finally, the last one, guys, we do have dividend hikes today from ticker symbol CPK, which was a 7% dividend hike, and ticker symbol SSD, which was a 3.6%. What's up, everyone? That's Antonio here bringing you episode 289 of the portfolio update. So it's actually going to be 289,000, but it's Sunday, guys. It's time to go over the portfolio, what I bought, what I sold, what dividends came in, and in general, what I'm doing right now in this market pullback. So you guys already know every single Sunday we come back, we look at the dividend scripts, we'll see how much our portfolio is projected to make on a passive income. This is a monthly income of what my portfolio is projected to make passively, guys. This is $142.38 on the month on average from the portfolio, completely passive. I don't have to do anything for this. This was much it was much higher about a few weeks ago until I finally sold out of a lot of my SCHD positions and invested into lower dividend yielding companies that are actually going to have double-digit 5-year CAGRs. I think my future self will thank me. We'll see where it plays off, guys, but I think it's the right move. I do want to accumulate some more SCHD, but right now with these pullbacks, I just prefer to have more of my money invested in tech, which I think it's going to actually pay off very, very well. But anyways, you'll see here annual dividends, guys. I have not updated it. I actually need to, and I probably do the same thing every week. But yeah, super busy with a busy local business we have, and it's just so time consuming. If you guys are business owners, let me know in the comment section. They're very time consuming. I did not realize they were this much. But anyways, here quarterly dividends as well. We gotta have to get that updated. And then options premium, I haven't really had funds to do options here in general. For mostly stick around with cash secure puts. I'm trying to stay away from covered calls. I could do covered calls and way out of the money, generate a couple dollars for each one, but just the way that the market is right now, it's just not worth it, because if they do get some great news and the market starts moving upwards, I'm probably gonna get caught in those covered calls, and I don't want to. I'd rather just accumulate shares for the long term for right now. I might sell some covered calls when we're at the very top potentially. But if we do look, rate of return from last year was a 5.03%. Same thing for options. Just for the year, we've made $402.04. That was at the beginning. That was around January. So it's a great way to generate extra income. Last year, we made $6,752.75. So definitely cannot complain there on those. But if we do look at the goals, I don't have them updated as well, guys. But they're basically the same almost. Same thing, reach 20,000 subscribers. So if you're still new to the channel or returning viewer that hasn't subscribed, consider subscribing with that notification. As well, drop a big thumbs up on the video. Help me reach that 20,000 subscriber mark. Definitely would appreciate it. Right here, averaging, we've definitely are way below that now with the moves I made. Last year we reached 126. We're actually at 134,000 invested of my own money. Dollar cost average $100. I'm actually trying to do $200 per week, but I've been trying to do 300 right now with the market pulling back some. And I got to continue to try to put a little, as much, even $1 more into the portfolio, and these pullbacks are going to pay off very well in the long term. But if we do look here, guys, I do want to actually show you the S&P 500 on the charts. If I do show you the year to date, well, look, this is with February 19th was kind of like the peak we did, and then we started moving downwards. April 8th was the lowest we reached. That was an 18.90% on the S&P 500. We've slowly started recovering. In total, since the peak, we're only down about 7.8%, and for me, that is I'm gonna try to accumulate as much shares as I can. I'd rather be buying down here than having to buy up here, and a 7-8% down pullback, for me it's a win because I am invested in this for the long term. If we do it the 5-year, you see this, guys, pullbacks all the time, but the trend is upwards. Total max here, trend is upwards. So that is how you're going to be building wealth. As well as the dividend actually will be increasing, especially because I do have really low dividend yielding companies, but they do have double-digit 5-year CAGRs. So in a couple years, those will compound very, very nicely. If we do look here, this is the QQQ. February 19th again, we did hit a low on April 9th of 22.88%. So imagine the people that were buying then at that point. Such a great deal, such a great pullback. And guys, I was buying on the way down. Every single Sunday I showed you guys the updates, kept accumulating, kept depositing money. I had kept depositing money I didn't have, and especially because I knew my paychecks were coming, but I was living super tight. But I think they're gonna pay off right now. Since the peak, we're down only at 9.55%. Next week, guys, I'm gonna try to deposit some more money, buy a 9.55% down day, and yeah, we're gonna see how it pays off in the long term, guys. I've been investing since 2019 and it has paid off very, very well. I've only invested $134,000 is what it showed that I've invested of my own money, and we can kind of see where the portfolio is at, which I'll show you shortly. 5 years here, guys, you'll see pullbacks all the time, but the trend is upwards. Max pull upwards, guys, so it's gonna pay off in the long term, guys. And I've been buying mostly Meta, Amazon, Google, Nvidia, and yeah, we're gonna see where those come out. I think we're gonna get some pretty juicy returns in the long term. But if I do show you here, guys, portfolio, I've been investing since 2019, started dollar cost averaging, been trying to buy as much as I can, stayed focused, stayed disciplined. Actually took those pullbacks as a great buying opportunity, stayed disciplined there, and the portfolio right now is worth at $289,000. So I'm super happy with that, and I'm gonna continue to stay disciplined, continue to buy those dips. And right now for me, it's still a dip right now. Obviously we could pull back even lower and go lower than that 9% we're at on the QQQ. We could go back below 22, even further down. We don't know, but from history, it has always gone upwards, and it's best to buy the dip or the pullbacks in the corrections, and that's what I've been doing. It's been paying off these past couple years, and on the 2-year change, you'll see we're up $89,682, which is about a 44.98%. 1 month though, we are actually in the green, guys. There was a couple weeks ago when we looked at the 1 month, 3 month, we were in the red, and now we're at 7.79%. It's about 20,000, almost 21,000. 3 months here, guys, we're up 1.47%, which is about $4,000. And then on the 6 month, we're up 2.20%, which is about 6,200. Year to date, we're up 3.55%, which is about 9,900. So since the beginning of January, we are only up about a 3.55%. That is okay, guys. Long term, we will be up higher. If we look at the 1 year all the way till May of last year, we are up about a 17.87%, which is a $43,800 change in there. If I do show you the positions, guys, though, total gains, we are up by $31,951.45, which is a 12.43%. We do have about 41 cents ready to invest. I actually can't really invest those right now, and I need to deposit some more money next week. But guys, this is my core position: Microsoft, Alphabet, Meta, Amazon, Costco, Nvidia, MasterCard, Visa, and Apple. Didn't really have much of Apple. I kind of sold out. Actually pushed that money into these other greater companies that were growing much faster. That will give me a better return long term. We do look at Alphabet, guys. Google here, 343 shares. Want to be picking up more. Meta, 65 shares. We're actually in the green on some of these. Alphabet, I am still down, so I'm gonna be trying to dollar cost average the way down some. And on my cost basis, SCHD, guys, we have over 272 shares, about $7,000 is kind of what it's worth. And yeah, we're gonna be trying to keep these right now. We'll see what happens in the long term. I'm trying to build out these positions massively, and because I think they're gonna give me some great returns. And then we look at the portfolio performance. You'll see we're up about $73,633.28. You guys can see this trend going upwards, and then we took that big dip here in April, and then we're finally recovering again. So long term, guys, it's gonna pay off. And rate of return, that is a 36.18%. If we do look at investment income, we are projected to make in the next 12 months on a yearly $1,707.03, averaging about $142.25. If we do look at the history here, guys, I do have it to start filtering out from the 4th of May all the way till the 9th of May. Not much activities here, guys. Again, I'm also a little bit tight on money right now, but I've been trying to buy as much as I possibly can deposit into the portfolio, because again, I only put money in this portfolio that I don't need. I won't need 5-10 years from now. Hopefully nothing changes from that, but that is my goal. Try to put money I don't want to touch here, so I can't deposit my whole paycheck in here. I wish I could, but right now that is not the case. If we do look on the 5th or Cinco de Mayo, we did buy some Amazon, guys. Bought $150, bought about 0.8 shares, and then that was about $186 share price. We also bought some Google at we bought 0.90 shares, $150 worth of it at a range of $164. If I had just waited maybe about 2 days, we could have bought it at $150, because Google did pull back about an 8%, I believe, or so. And I wish I had bought that, but we did deposit those $300, which we made these purchases on Cinco de Mayo. And then you'll see on the 9th, guys, MasterCard did pay out a dividend of $16.99. It did actually drip itself that same day. Bought about 0.03 shares at $565, and yeah, that's pretty much it for this week there. Very easy, very basic, and the portfolio will go up long term, guys. Staying disciplined. I am not changing my strategy here, but let's go ahead and see how much we grew the dividend snowball from these two purchases this past week. So I'll see you guys over there to the portfolio. All right, guys, so we're at the dashboard on my Google Sheets. I have a copy of this over here so you can kind of see the difference. So let's go ahead and go over here to settings. We'll go ahead and get rid of this. And now we can jump over to Empower, which has the latest version of my portfolio with all the purchases from this past week. So let's go ahead and jump over there. All right, guys, so we're at Empower on my Schwab account. Click on this green button, it's called Copy Holdings. Go back to the portfolio, Google Sheets, right click, Pay Special Values. I have these scripts available for free, guys, completely. There is one major script that is broken right now. Have not had time to fix it. But this is an old snapshot of my portfolio. We go to Portfolio Tools, click Portfolio Update Portfolio Holdings. This will get wiped. It'll parse out the new stuff we just pasted. So let's go ahead and click on it. Give it a second or two, and there it goes, guys. We can jump back over here. Everything is being auto calculated. It looks like it's done. Projected dividend yield is at 0.59%, no change here. And then yield on cost is at 0.66% compared to last week of 0.67%. And guys, this is less than 1% on a dividend yield. And then on the yearly, we're projected to make $1,709.38 compared to $1,708.58. Didn't go up much as well because it was only $150 towards Google. Amazon does not pay a dividend right now, but I think we're gonna get some pretty good rate of return there. Monthly, 142 with 45 cents. Did go up in difference about 7 pennies. So every month we're making 7 more pennies. On the weekly, we're making $32.87 compared to $32.86. So 1 penny increase there. Daily, we're only making $4.68. Hourly, we're still making 20 cents every single hour. And then hourly work wage. This is if our portfolio was to go work a 40-hour work week, they would get paid an hourly rate of 82 cents. Eventually, we're going to try to get this to minimum wage. We'll see how long that takes, guys. That'll be a huge, awesome milestone to achieve. Anyways, this is actually all I have for you guys. Don't forget to subscribe with the notification. Drop a big thumbs up on the video, helps out the channel a lot, costs you nothing, definitely appreciate it. And if you stuck all the way to the very end, let me know by dropping a hashtag Google, because I have been buying Google, guys, and we will see what happens with the market, with the portfolio. I am going to continue to stay disciplined, continue to buy, and especially we're still at a 7 to 9% down from the high. So I'm going to continue to dollar cost average downwards, and if we get a huge pullback even more, I'm going to be deploying more money that I possibly can, and I'll be living under my means. We'll see what happens, guys. I will talk to you guys later. Take care, stay safe out there. Bye, guys.